Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is a series of videos about financial statement analysis, and the first one is vertical and horizontal analysis. All of the other videos about financial statement analysis, they are in our video description. Okay? And what is also in our video description? The financial statement that we will be working with. That is Coca-Cola. So, uh, huge disclaimer here. We are not working with any classified information. It is all public. If you go on this website here, you can find it. I will copy and paste this website for you guys in our video description, as well as our Excel file with the financial statements in our Excel file. Okay, this is a PDF file, but if you Google it, you can find the Coca-Cola financial statements also in an Excel format. Okay, so we are not working with any classified information, and we will be working with a real life company. Okay. So first of all, vertical analysis, expressing each item in a financial statement as a percentage of the same base amount. For example, income statement, items expressed as a percentage of sales. So let's go to our Excel file. Income statement. So here, income statement, balance sheet, vertical analysis, horizontal analysis, and then our other videos about liquidity, solvency, and profitability ratios. Okay, so everything in only one file. So income statement, if we go back to our PowerPoint, a percentage of sales. In the US, if we are talking about US based companies, we have revenue and it is net revenue because sales tax is not an expense in the US. If we are talking about international accounting, that sales tax is an expense, then we work with net revenue. That is usually this third row here. In the US, it's total revenue. In other countries, it is net revenue. So we work with this number for vertical analysis. So how do we do that? Revenue divided by total revenue. And let's fix this one, but let's fix only the number here. So we will be fixing the row and not the column. Okay? 100%, that is quite normal. And let's copy and paste to everything else. Not Usually earnings per share, we don't do vertical or horizontal analysis. Horizontal, okay, but never vertical analysis. Okay. Here, then let's delete the whoa. I will not want to hurt my formats. Okay. Let's just delete this zero here and okay. Wow. And then let's copy and paste this column here to this column there. And we have the same numbers and here. Okay, so why only fix the row? Because here we are working with the F. So we are working with 2018. So we are working with 3 years, 2019, 18, and 17. And we have a lot of numbers here. How to analyze it? Usually, we don't analyze these very low numbers. Okay, labor and related expense, 0.54% of net revenue. It is not material numbers. So usually, we analyze the big numbers. For instance, cost of revenue or cost of goods sold. It is almost 40% of their revenue. So the production cost of Coca-Cola, it is 39% in 2018, 38 in 2018, and 37 in 2017. Okay, almost the same, but a small increase here. So gross profit is revenue less cost of goods sold, so it is 100 less 39. Selling, general, and administrative expenses 32, 32, almost the same. 35, so nice decrease here. But again, comparing to our net revenue, advertising expenses, see a huge number here, almost 12% of their revenue. It is advertising expenses. That's why we see ads from Coca-Cola all over the place, in all over the world. And here, a lot of small number, and operating expenses. It is 75% of our revenue. A huge number here. And then, what do we have here? We have operating income and these operating expenses here. Coca-Cola also add the cost of revenue here. Not so usual, but okay. And operating income, also a huge one. Almost 25% of our revenue. Wow, a huge margin here. And then some additional items. And net income 24%, much better than the other month here. So very, very nice numbers for Coca-Cola. Okay, guys, so this is how we usually perform vertical analysis for income statement. What about balance sheet? Balance sheet items are expressed as a percentage of total assets. So let's go to our balance sheet here. All of our numbers based on total assets. Where are you? Total assets. Total assets here. And again, we fix the row, not the column. Okay, here, let's copy and paste. Paste our formula. And let's delete these numbers here. Okay, so let's just make it beautiful. Okay. And now we copy and paste this formula here to 2018 and 2017. So, okay, all of these numbers, we need to analyze it uh, in relation with the total assets. So Coca-Cola has a huge cash, is 13%, but it was much higher in the past. Uh, so a lot of cash when we compare it uh, to our total assets. And then accounts receivable, not a very large number here, so they receive a lot of revenues in cash instead of accounts receivable. Inventory, also not a huge number here, so they have a very low inventory. That is good. And it's basically about raw materials. So they don't have a lot of finished good inventory because the turnover is very fast. So we don't need to storage a lot of sodas. And then the other current assets and so on. So comparing here, the current assets is 23% of our total assets, but 12 is cash. So half of our current assets, it is cash. So a very large number, but it was 41 in 2017. Wow. And property, plant, and equipment usually is the largest number for non-financial companies, but Coca-Cola, again, the cash is so big. In 2017, it was larger than all of their property, plant, and equipment. Wow, very, very good company here. And then, sorry, the highest number, more than buildings, it is equipment. See how cool it is, this analysis. So they have more equipment than buildings. And this negative number is our depreciation. Okay, and goodwill, they don't have it. Intangibles, they have some intangibles here, some very nice numbers for intangibles. That is usually research and development, goodwill, and so on. Long-term investments, affiliate companies. A lot of money invested here. What are usually their affiliate companies? Coca-Cola is a US-based company, but the one who produce Coca-Cola, there are in some countries, for instance, Brazil and so on, they are not Coca-Cola owned, but they are Coca-Cola partners. So Coca-Cola has some companies abroad as well. And we can check it here on the uh, equity about the translation adjustment. That is the adjustment for uh, translating numbers from other countries to the US. Value here because nothing. Okay. So liabilities, what are they? Huge liabilities. Notes payable, short-term debit, a lot of short-term debit here. So this number of cash is not so large anymore because they have a lot of current liabilities. So here now, our very good number about cash, it is not so good numbers anymore. And the current assets here, so they can have a negative working capital in some years. So that is not so good. And long-term debit, huge one here. Huge notes payable here. So notes payable, when we compare short-term and long-term debit, it's almost 50% of their assets. So man, they have a lot of liabilities here. And then the total debit here, 49. There are some other numbers that they are not disclosing here. So total debit here, a huge number as well. So Coca-Cola, you should have provided more info for us. Deferred tax and so on. So here we have 78% of their assets. It is liability, short or long-term liabilities. Okay, so their capital structure is more focused on liabilities than stockholders' equity. And here we have, maybe this is the problem, the treasury stocks. They repurchase a lot of their stock. So they have a lot of stocks to resell it. So they can raise a lot of money in the future. So maybe this is the reason why they have so much liability here. But it can also be a good info here or a good number because when they sell it again to the market, they can earn a lot of money and they can balance this negative working capital. That is working capital, current assets less current liabilities. Okay, so this is our, and then total equity here, total equity here. And of course, total liabilities and shareholders' equity or stockholders' equity, they are also 100% because assets equal liabilities plus shareholders' equity. So they will have the same numbers always. Okay, guys, so this is financial, this is vertical analysis. And what about horizontal analysis? And analyzing trends in financial statement data for a single company over time based on the behavior when we compare years. So, okay, how much increase or decrease over time? Current year less prior year divided by prior year. So let's do here on balance sheet. Let's start with balance sheet. Equal current year less prior year divided by prior year. So our cash is 30% below the previous year. And here, let's paste our formula here. Nothing here, nothing there, nothing here, here, and here. And now we copy and paste for 2018. And we don't have a horizontal analysis for 2017 because we don't have the prior year. So we will always lose 1 year. So that's why we usually take 3 years and then we use 2. What is the other stuff here? We delete this divided by 0 here. It doesn't make sense. And also here, it will be less 100%. That doesn't make sense. Okay, so it goes down here because it is discontinued operation. So that makes sense. Here, 1 more divided by nothing. More divided by nothing here. So we need to make it pretty. Okay, so don't present this divided by 0 to your professor or anything like that, or to your boss or client. Okay, now it's much better. So let's analyze the big numbers here. Again, cash. Let's take the green one. I am from Brazil and yellow and green is our national flag. So I like these 2 colors. And okay, cash and short-term investments, also big numbers. Inventory, it is a very low number, but it is increasing. So okay, small numbers, but very important number here, and they are increasing. And because of this other inventory and also finished goods, it's increasing. Other current assets, and here, a very good point here. It is decreasing 49, is decreasing 98. But look at the vertical analysis here, 0 point something. Very, very low number. So it doesn't matter if our horizontal analysis is large or small. Let's think about your grades, guys. First exam, your grade is only 10%. The second exam, your grade is 80%. You double it, you increase it in 100%. But your grade is too low, so it doesn't matter. You are not a good position here. Okay, so current assets. And then, so we don't analyze these numbers when the vertical analysis is so low. Usually, less than 2 or 3%, we don't analyze vertical analysis. But current assets, we analyze it. It is decreasing and decreasing a lot. That is not good. Property, plant, and equipment, it is increasing a little bit, basically because of the land and also the uh, building and machinery as well. Goodwill is also increasing, and that is good. They are purchasing new companies or they are investing money in research and development. Or, sorry, goodwill, they are purchasing companies. And then intangible, they are usually investing in research and development or they are purchasing new brands and so on. So this goodwill here is also relevant. And it is yellow in your Excel file. And the total asset is decreasing a little bit in 2018, increasing a little bit in 2019, but a little bit smaller than the first year yet. Accounts payable, it is increasing a lot. So it's much more relevant than it was in 2017. Notes payable, remember, very large number. However, it is decreasing. So it increased a little bit in 2018, but it's decreasing in 2019. So it is good news. So large number, but decreasing. So for liabilities, it is good. And here, current portions of long-term debit, capital lease, also decreasing. It increased a lot in 2018, but decreases now. And current liabilities is decreasing in 2019, but decreasing much lower than the current assets. So it is not that good, especially 2018. See how bad it is. Decreasing 31% current assets, increasing 5%, almost 6% in in current liabilities. Okay. What about long-term debit? Long-term debit increasing after a decrease in 2018. So total debit decreasing a little bit. And other liabilities, 9% and increasing after a small decrease in 2018. So total liabilities, that is short and long term. So it is almost the same here. So decrease a little bit of current liabilities, increase long-term liabilities. And it happens the opposite in 2018. Increase current liabilities, decrease total liabilities. So sort of opposite behavior here. And the total equity increased 11% after a short decrease in 2018. That is good. So here we have some retained earnings, a huge number of retained earnings here. It should have been analyzed and increases, small increases here, and that is good. Unrealized gain or loss, lot of variation here, but very small numbers. Okay, and then translation here, it is a very large number here. And pension plan adjustment is small number, but huge changes here. Other comprehensive income also very short number. And then the horizontal analysis for total liabilities is exactly the same as total assets. Okay, guys, so subscribe our channel, like our Facebook page, Accounting Hub by Dr. Scarpin. Like this video, and thank you for watching it. If you have questions or comments, leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.